Hello, I'm Finola Burke from RAS, and today our focus is on junior energy producer and explorer, Energy, ASX ticker AJQ. Joining me is CEO Christian Lang and my colleague Andy Williams. Welcome to you both. Andy, I'm going to let you kick off today's session.
Thanks, Finola. Christian, ARMA's sort of going through a fairly significant process of reset and renewal at the moment. I guess the key element from that is the Surat production and infrastructure base. I was wondering if you could run us through what the reset of Kincora in particular is going to look like, the strategy around returning to production growth, and particularly the alignment within that with Schlumberger.
Yep, thanks, Finola, Andy, for having me. Yes, as ARMA Energy has, a gas plant which is Kincora near Surat in Queensland with about a 30 terajoule a day nameplate, production capacity, currently producing around 4 TJs a day, so underutilised. ARMA has within the region, within its production licenses, has about 130 odd, or 140 actually, petajoules of 2P resources. So the plan in the near term is to produce, to do a well optimization program in the existing sort of 40 producing wells to raise production through the back end of this calendar year to around the 10 TJ a day mark. And then exiting 2025 through a combination again of in wellbore activity but new well drilling, exiting 2025 at around 20 TJs a day. So that's the production plan for the asset. So 10 TJs a day by year end, 20 TJs a day over the next 3 years. In line with that, we also have, we've recently announced back in November a relationship that we have with Schlumberger, which is around providing some technical expertise, so leveraging on Schlumberger's sort of global and domestic footprint and the work that they've done previously around the area. Also provides us with good access to technology, software systems, and the services and materials we require to actually execute our programs. So using them, if you like, not only for services, but also to peer review, because we're maintaining quite a lean team here of high quality individuals in subsurface exploration, commercial and projects. And that will then drive the activities, and having Schlumberger provide, if you like, the technical backup and the peer review. So that's the short-term plan, and utilising the skill set that Schlumberger bring to a company like ARMA, I think, is invaluable.
I guess the next bit that comes with production growth is effectively a reset of the operations in a commercial sense. You've recently announced a very good agreement with Shell. Apart from the obvious benefits, and even including the obvious benefits of pricing, could you also sort of give us a bit of colour on the potential value add that'll come through your Newstead facilities?
Indeed. So again, the headline with the gas sales agreement for Shell, it's a 13-month agreement, and the short time frame is really to recognise that there is quite a lot of volatility in the marketplace. If we look at 2021, the average spot price across a year for Brisbane was like $9.90. It's $20 and change for 2022, and currently this year the average is floating around for the first couple of months of the year around $13. Current price around $9. So there's a lot of volatility. So the thinking was to have a shorter term agreement, because in reality, with government intervention, obviously there's going to be a delay in certain capital projects, i.e., there isn't going to be a supply response anytime soon, given that. Therefore, the market will be volatile, particularly across the winter period and so forth. So I think it was the right thing to do to have a shorter term agreement. So we're governed by the Emergency Gas Order 2022 for 23 pricing. So the 1 month of the new Shell contract that we have in December of this year is at $12. And then we have an uplift in line with what we generally think, forecast gas prices will be across 2024. So, in real terms, that's about a 93% increase in gas price from today across, 2024. So that's quite significant for Armour Energy in terms of income.
Yeah, could you, I guess following on from that volatility, your ownership of Newstead as a gas storage facility, and I think there's a lot of value embedded in midstream assets to come. How you can hope to leverage that better within and take advantage of that volatility within the market?
No, I think you're right, Andy. If we look at, Lockhart Energy's, gas storage facility down in Victoria, provides a lot of, if you like, arbitrage, right, and opportunity down on the East Coast. And here in Queensland, they're really, with the exception of one or two smaller facilities, there isn't really that opportunity to the scale that the Iona gas plant provides in Victoria. So the Newstead facility, which is 100% owned and operated by Armour, is about a 7.9 petajoule facility. That's what our license is for. And, currently it is underutilized, but we believe that it will and can provide certain utility going forward, particularly, when gas prices are relatively low, soft demand, and there's a lot of, gas on the marketplace. Typically, like we've seen in the first couple of months of this year, with the QC LNG plant in an unplanned shutdown, there's a lot of gas available domestically. So having a facility where you can store that gas for a rainy day, so to speak, I think is invaluable. So, we seek to do a bit of technical work on Newstead, put it back into operational standard, and then start to look for opportunities and customers really to utilise that facility.
Well, 7.9 petajoules a year is pretty close to 22 terajoules a day. That's an important increment to be able to put in and out or into the market or absorb over the course of the volatility and the pricing, particularly coming into and out of the winter peaks. So is there opportunity to perhaps expand Newstead as well?
There is. So the Newstead reservoir, there is it's basically a wet gas reservoir, so it's not water driven. So it's, in a sense, very valuable from that aspect because you're not competing with the water. And so next door we have what is the Carbine reservoir, which is identical to Newstead. So there is a thesis that we can expand the total reservoir storage by adding Carbine, which is in its late stages. So within the next couple of years, the last couple of wells that are producing out of Carbine will no longer be relevant. So there's an opportunity there, of course, to expand.
And just lastly from me, Armour's more than simply Surat Basin, and although there's low-hanging fruit in terms of production growth, but you've got some very interesting longer-term growth projects, and the one that I think from your presentations looks incredibly enticing is Enterprise North in the Otways in Victoria. I was wondering if you could just give us some sort of implications of what a success case there could mean and the potential timing on maybe evaluating that prospect.
So Enterprise North 1 is in the tenement, which is PEP 169, which we own in joint venture with Lakes Blue Energy. So Armour is 51% an operator. Currently, Lakes and Armour are progressing the planning as well as the approval process. So we embarked on that, about 6 months ago, started a process with environmental approvals, landholder access and so forth, with an aim towards having everything ready to drill in the summer of this year. So, basically next summer, which seems to be about the right time for somewhere like the, southern part of Victoria. So we're pretty excited by it because Beach Energy drilled Enterprise, the Enterprise 1 well in 2020 and had outstanding results. And we believe that the Enterprise North will be drilled into a similar structure with the same Worry sands, which is a very highly permeable sand. And if we look at the potential size of that structure, we're pretty bullish, I think, on the possibilities, and particularly when you look at the testing from Enterprise 1, which tested at about 63 million cubic feet a day, even half of that would be a terrific result out of Enterprise North 1. So yes, we think that it represents one of the largest opportunities in the portfolio, and certainly very important given the recent news out of Victoria with respect to the decline rates out of the Bass Strait.
Yes, I'm a bit concerned for winter this year and in the immediate future. Thank you very much for that, Christian. I'll throw back to Finola.
Thanks so much. Thanks, Andy. Thanks, Christian. Christian, you have got just announced a recent recapitalisation plan for you, which will strengthen up the balance sheet. Have you any feedback that you can give us on the progress of that?
Yeah, we started obviously the capital raise last week, and I think it's sort of going as expected. It's a pretty tough market, as you might expect. I think, timing is everything, and certainly probably not greatly assisted by what's been happening with the global banking market. However, we're sort of progressing, as expected. And it's an important part of the reset of ARMA. The reset really is around resetting the balance sheet, reducing and eliminating debt really over the course of time, improving production, and of course getting a better price for the product. So that's really the near-term focus for us.
Well, thank you both for your time today. Looking forward to catching up with you through the course of 2023 to check on ARMA's progress.